Hi all, dear listeners. Welcome to this new episode of my podcast, A Digital Tomorrow. Today I'm joined by Peter Clifford, Director for CBDCs and Payments at Digital Assets. Welcome, Peter, to my show.
Thank you, Ariel. It's a pleasure to be here.
Well, the pleasure is absolutely mine, and I'm sure we're going to have an amazing half an hour discussing CBDCs and many more interesting topics. But before that, before digging deeper, I would like to start with your personal journey. If you could please summarize with my listeners a bit more about your personal journey, what made you decide to enter the fintech world, or anything that you want to share.
Well, thank you, Ariel. So my entry into the fintech world was more fintech coming into the area of finance that I was working in. So I worked for the World Federation of Exchanges for a number of years, from 2000 up to about 2014. And in that time, fintech totally transformed the trading of securities around the world. We saw a huge expansion in countries that were developing derivative markets, which started, in Asia at that time from a very low base and became very big markets. And also it was an interesting period of technology and regulation changing at the same time. So you had dark pools, algo trading, high frequency trading, all coming in. The roles and responsibilities of the actors in these markets completely changed. Monopolies were broken. The way data was handled was totally different. And so that was something which, when blockchain started to be seen as another transformation, it was just a natural attraction to go into that. A lot of the exchanges that I was working with and around at that time were looking at blockchain and other financial innovations as a way of disintermediating people in the process between the trading, the post-trade, and even issuance. So that was something that was going on back even in 2014, which was when I was sort of first really focusing on that. Then after that, I was at the Fed for a number of years, and then came back into a more fintech world after that. But that's sort of the origins of when I first started hearing about things like blockchain and distributed ledgers.
Mm-hmm. And well, as I mentioned before, when I introduced you to my listeners, you are currently working as a director for CBDC and payments at Digital Asset Holdings. Could you please let me know a bit more about this company, Digital Asset Holdings? Like, what are you doing in general?
Okay. Well, Digital Asset is it's a company with global offices, 6 offices around the world, but still very much a startup and still very much an entrepreneurial spirit to this company. It started in blockchain space itself with Hyperledger, and eventually spun the Hyperledger off to the Linux Foundation, and then focused on the next layer above blockchain, which is smart contracts and work around distributed ledgers, and is basically known for that, I think. Where it's really gotten its footing, or where its value added is most concrete, is around any kind of operation with multi-party complex systems. So if you're just keeping track of, say, a database, you might not need something that has interoperability and privacy. But when you start to share information across different organizations, that's when things like smart contracts and interoperability become very, very critical to the success of the operations. And so that's the area that we focus on, both in healthcare, in financial markets, and basically in any kind of other system that needs to share information, do it securely, and be able to transact and send information across different platforms.
Well, that's a very relevant area indeed. And if I'm not mistaken, prior to that, you led the Federal Reserve Board Policy Development Group. So what were your main functions at the FRB?
So at the board, I was in charge of policy development, which sits in a group called Supervision and Regulation. And the way that that works, in case people are interested in the central bank, is that you have a large amount of data that is dumped from the banks into the Fed every day. So we see all kinds of operations that are going on there, and we have people crunching. We have very good analytics department. We also have a huge group of supervisors. So there's one division of the Federal Reserve Board, which is in Washington, and it's the legal government part of the Federal Reserve. That was actually larger than the CFTC, for instance. It's a very big operation. And along with the regional banks, they actually go and visit the banks. If you're looking at credit risk, they will be going and looking actually at loans and looking at how they're written. So we get a lot of granular information from the ground there. And then the next part of the Fed is the economists. So we have the largest number, or they have, because I'm not the Fed and nothing I say is about the Fed, but the Federal Reserve has the largest number of PhDs outside of the Department of Education. So we have a lot of people looking at a macro level and looking at how markets are interacting with the real economy. I can give you an example of that, how that all fits into policy. So for instance, in the policy side, when I joined the Federal Reserve, oil prices were particularly low around 2015, 2016. And you're looking at how is that affecting a lot of the fracking operations that were going on, that had a lot of leverage. They were being impacted, but that was also then a spillover into the banks, into real estate. And living on the coasts around the time of the 2016 election, you wouldn't have known necessarily that there was a regional recession going on in parts of the middle country, the Midwest and Texas particularly, because of that. So it's interesting how they're able to look at that. And then from a policy perspective, you say, what is the role of the federal government here? Do we have to step in? Do we have to do anything? And that could be with protection of investors, or it could be in larger initiatives that they might look at. So that was the sort of policy review function and policy development, writing new regulation. And then the other part of it was sort of looking around the corner to problems that might be arising. There was a risk council, and that would be looking at things like fintech in those days. And that's where we started sort of focusing on areas of concentration where some companies which weren't actually banks or not even financial institutions might be playing a really important role because a lot of banks are relying on them for data storage or transmission of information.
Mm-hmm. Well, thank you very much for sharing about your personal journey and previous and current roles. And well, now I would like to start talking about central bank digital currencies, which is an area about which you and I share a huge interest in. No, I mean, you're working, as I said before, as director for CBDC, digital asset, and I myself, I've been doing extensive research on this topic and teaching about this. So even though I'm aware that most of my listeners will already know that, just in case, what's a CBDC? I mean, how would you describe the idea of a central bank digital currency?
It's a really good question because there are lots of different definitions and different descriptions of currency. So CBDC itself, the letters stand for central bank digital currency. I think one of the best descriptions of it came out of one of the early BIS reports, I think around 2016, which was saying it's central bank money in a new digital format. I think that's important because some people say, well, why do we need digital currency? We already have digital payments. Your bank account is digital. Your credit cards are digital payments. And so the fact that it's new technologies that are being used is an important aspect of it. The fact that new technologies are using central bank money as opposed to your checking account or credit from a bank, that's also an important element of it. And I think it also, if you think of it that way, you get around some of the mental challenges that you might have if you start to think of it as a liability of the central bank. So yes, a central bank digital currency would be a liability of the central bank, but in certain use cases, that liability may be seconds in existence. So it's not in the same way that a liability is the way that you think of them traditionally as something that might be years. So I think if you think about it as using new technologies for central bank money to solve problems, that's a better way of thinking about central bank money. And the idea is to have money that's smarter, that's faster, and it's more transparent about how it's being used.
Well, I think that's a great definition. And I wanted, sorry, I wanted to talk now about the US, because I know that initially there wasn't much interest in the idea of a CBDC, but I think that things may have changed in there. So I wanted to ask you, like, is the US currently working on the digital US dollar, which would be its own CBDC? And if so, what's the current status?
So I don't have inside information on what's going on with the Federal Reserve at the moment, but there is quite a lot of public information that's out there. So the first is a consultation that's underway at the moment that anyone can answer, and it's due on May 20th, 2022. So that's 22 questions around CBDC, and we're going to be publishing our own answers, as well as working with groups in Washington as they formulate answers to those questions. So that gives you some idea as to some of the concerns or priorities that the Federal Reserve Board has. And again, the board is the part that promulgates laws. The Federal Reserve banks also have an important role in that. So the Federal Reserve Bank in Boston is working with MIT. They also published a couple of months ago Project Hamilton. And so they've given a lot of information as to especially the importance of work around using blockchains and bandwidth and the different solutions that they would have on that part. So it's not the whole end-to-end issuance to final customer CBDC, but it's the important sort of engine behind CBDC, how that could be structured. So that's really interesting work. There is a number of laws being proposed and discussions with regulators and with legislators around stablecoins. And then capping this all off is an executive order from the White House to go and look at all of the different aspects of CBDC, crypto, stablecoins, and other financial developments. That's going to be rolled out throughout this year and maybe into next year. Hopefully coming out of that, we'll have more or a clearer idea of what the government will be doing on CBDC going forward.
Well, I mean, it's exciting to see things moving forward in that sense. And I wanted to ask you, like, to you, what would be like the main advantages for the US to have the digital US dollar? And also, what would be like the main challenges or even risks that you see?
So I think the early stages of testing of digital currency were really to see if the technology worked. And I think those tests showed that the technology basically works. And so now I think we're coming to a second stage, which is show us use cases and where it provides solutions that traditional banking or financial markets haven't. So I think the advantage is, first of all, you have to concentrate on things on the periphery of the financial markets that aren't being served well at the moment. So in the United States, but in many other countries, we have a question of financial inclusion that's particularly important. You have a question of cross-border payments. Within that, there's a subsection of remittances. So it's generally seen that these processes are too opaque, too slow, too expensive, and could be speeded up by a number of ways. And then you have a number of different retail payments. So for instance, payments with credit cards could be perhaps done less expensively using central bank digital currencies. And so commercial shops might be interested in developing that as well. Behind that, you also have what's called wholesale CBDC in financial markets. And there you get at issues like liquidity risk, credit risk, depository risk, where a CBDC could actually make the system safer in some ways because of the way that the data can be structured, and you can make transfers much shorter in terms of the chain of people involved in that. You can make them more secure because you can program the privacy rights in that. And so there's a lot of advantages from that point of view. So those are a couple of the advantages, and I think those are things that you will see in any central bank description or RFI or RFP as to what they're looking to do. The risks, too, that come up quite often, I've cited quite often, are cybersecurity, and that's a risk in any case for the financial markets. So I think when we're thinking about the risks to it, we have to think, are these new risks, are these added risks, or are these just existing risks that are changing? And so I think, you know, from a cyber point of view, it's probably an existing risk. I don't think we're actually necessarily adding more layers of risk given the surface for attack in cyber that you have at the moment, which is already extensive. The other risk that you hear spoken about quite often is disruption or financial stability risk. One of those risks is about deposits. There's a concern amongst central banks that's repeated quite often that if CBDC were to become so attractive and so powerful that everybody wanted that, they would move from commercial bank money, which is your bank accounts today, to a CBDC account. And that would undermine potentially credit in the financial markets. To my point of view on that, I think that there are many, many ways that that could be avoided. There are a number of ways that you can mitigate any problem like that. But it remains one issue that is repeated often, and I think it's repeated often because it's of a major concern to the banking lobbies and to the large banks that the central banks don't enter into competition with them. So I think it's something that you hear a lot about, but I think it's a very fixable problem. I think the solutions are there waiting to be implemented. But those are sort of the two main things that I think you'll hear repeated quite often.
Mm-hmm. And technology-wise, CBDCs may and may not use blockchain. We know, for example, that perhaps there will be like a better use case for blockchain in wholesale CBDCs. But anyway, what do you think about this? Do you think that ideally CBDCs should use blockchain, or what do you think about this topic?
So if you look at the Project Hamilton report, I think they were fairly clear that in terms of the throughput and the amount of messaging that would go through a CBDC or a large-scale CBDC, it probably wouldn't be suited to a traditional blockchain. But having said that, I think from digital assets point of view, we see a distributed or a decentralized distributed ledger technology as being a really way of being able to hit those levels of throughput and having many systems speaking to each other. And so, for instance, you know, your bank would be managing its ledger and its transactions within that bank and within its clients. If it's interacting with another bank, it does that through an interoperable ledger that can connect to that. And in that way, you can have many different kinds of technologies. You can have distributed ledger technologies. You can have different versions of blockchain. You can have traditional databases. You can have mainframe computers all linking in and sharing this system. And that's really what digital asset is about, building a system that can process information and control privacy and flows across these networks.
You just mentioned now privacy, and I know that privacy is a big concern when it comes to CBDCs, especially in the West, but I would say that pretty much worldwide. So I wanted to ask you, do you share this concern? And well, if so, how do you think the digital US dollar could make sure that privacy is properly respected whilst leveraging all the other many advantages offered by CBDCs?
So again, privacy is one of the areas that digital asset focused on. So it's one of the things I think that distinguishes us and the research that we've been doing since 2017 on the subject. So privacy at the moment is based to a large extent on the ability to encrypt the information But regular blockchains then share that information in an encrypted form so that everybody is updating one source of information. What we try to do is a decentralized digital ledger technology. So if you and I are transacting, for example, Oriel, just the information that you need to do the operation and that I need would be shared. And if it's going through third parties to connect us, they would only need that amount of information that's necessary to complete the transaction, which means that I'm not sharing with you a complete set of information that I have in an encrypted version, or getting a complete version of where your money is in encrypted versions, because even if we're holding it in encrypted formats, with the advances in computing power, encryption today might not be as well encrypted in 5 or 10 years. So we have to bear that in mind. So sharing only the information you need is like one of the major steps around privacy, in our opinion. The second thing about doing that is that you are then aware of where that data is being stored. So one of the important parts about privacy is the right to be forgotten. This is part of the European standards for that. On a regular blockchain, going back and erasing data is particularly difficult to do. However, if you're doing it on a decentralized distributed ledger technology like we're proposing, you're able to do that because you know where that data is being stored. You can go back and correct things that you wanted to do. So it is really important. There was a study done in Europe that you're aware of, I'm sure, that said that it was like sort of the #1 component amongst retail participants in the survey was data privacy. I understood as well in that question was answered so that like 40% or more of the population was primarily concerned with privacy. I understood as well that there was an earlier question that said about digital currency, are you concerned about privacy? It's interesting because there people were less concerned, because with digital currency, like your bank account, with your credit card, you just are used to the fact that your bank and Visa knows, people are used to that. But when it's central bank currency, then that's the government, and that adds another layer into concern about it, because for the moment we have cash, which is completely anonymous, and if cash were to be replaced by that, then you lose a completely anonymous method of payment. Many governments have said one of the ideas of CBDC is to bring more tax revenue in, getting rid of gray markets, which can be very important in the economy, and putting them into CBDC. So you can see where there is some concern about that. But then on the other hand, within that European survey, and I remember when I was with the WFE and we did work on privacy and data, it's not a theoretical problem for people who have lived in Eastern Europe and had large-scale surveillance by the government during the Cold War. So people are very sensitive to that, and it's something that I think to have a successful CBDC, to have people use it, you have to take into account. So we would think that privacy rights need to be respected if you want CBDC to be widely used, and you can do that in a way that also allows regulatory compliance with know your customer and anti-money laundering as well.
I fully agree with you, and I mean, even though everything that you said is perfectly true, and I fully agree with you, it's also true, I think, that sometimes, I'm not going to say that there is a tendency to exaggerate, but it is true that some people tell me that CBDCs will mean the end for us, to be able to transact privately or something like that. But at the end of the day, I mean, whenever we're sharing our data with our banks, for example, we know that the IRS or the equivalent from each country will have access, to these, to our bank statements or whatever they want to check anyway. So my point is, unless you're using cash, which, as you said, is the only completely anonymous means of payment, you're always prone to some kind of surveillance to some extent. So it's true that CBDCs might theoretically become a tool for governments if they wanted to control people more like thoroughly. That's true, but I don't think that no one needs to be alarmed if everything is done like properly.
Mm-hmm. And the other point that central banks will make is that if they are controlling a large amount of the data and information flowing through it, as they do today with real-time gross settlement systems, they're not using that. They have no use for it from a commercial perspective. So being able to not only know your data, but to be able to know all of our data and then be able to profile people and things like that is not something that they're going to be wanting to do for a commercial perspective. So there are reasons to trust them more from that point of view. There's also, questions of tax collection and all of that, which, probably likely they would want to be doing something on those lines. But we'll see. We'll see. It's going to be different in every jurisdiction.
Indeed, I fully agree. You mentioned before as well stable coins. So I wanted to ask you, what do you think CBDCs will mean for the future of stable coins?
So I think there's a role for stable coins and CBDCs. And going forward, even if CBDCs are very successful, stable coins have very good commercial reasons why they would continue to exist. The starting point I would use for a difference between stable coins and CBDCs is that CBDCs as currency have a number of sort of semi-magical qualities that stable coins don't have. They don't have credit risk. They're indefeasible, meaning that you can't, if I pay you cash, no matter where that cash comes from, you're still paid. If I pay you Bitcoin, it could be that that Bitcoin was stolen somewhere and that Bitcoin is withdrawn from your wallet because of something that happened previously to that. So there are a number of reasons why a CBDC is better than stable coins for if you're holding it in a bank, if it's cash is from a liquidity perspective, a very good thing to have. But on the other hand, it doesn't get rid of stable coins because stable coins can be issued by private companies. They don't have to do the same level standard of making sure that everybody in the world has access to stable coins. They can design it for their own purposes, for their own commercial benefit, and for a subsection of the population that they want to work with. So there's a lot of reasons why you could have stable coins working alongside CBDCs. And they would probably just have different functions.
And what about cryptocurrencies other than stable coins? What do you think that CBDCs will mean to them? Because I know that many experts say that CBDCs maybe are designed or were born as a reaction to cryptocurrencies, as a way maybe to fight them. But to me, it's not exactly like that, no? Because I see, at least that's my point, that's my opinion, no? I see a perfectly possible coexistence between them. So I wanted to hear your thoughts on this.
Yeah, I would agree with you that well, not all cryptocurrencies are the same. And I think if you take something like Bitcoin, it's proven, I think, after 12 years that it's a strong network and anti-fragile system that's contributed a lot to financial markets. We've had, the use of blockchain, proof of work, DAOs, all coming from that. So a great amount of innovation and a lot of what we want to do in CBDC, for instance, the ability to do a peer-to-peer payment with CBDC comes from that mind frame and from that development. I think as well, people have said that it's bringing in a whole new generation of people who wouldn't necessarily want to work at banks, but are interested by the financial possibilities of addressing problems such as financial inclusion in other areas. The other thing I think that's interesting about Bitcoin in particular is that it got us thinking about money in different ways. If you think of the traditional, another description of currency was unit of account, store of value, means of transaction. And Bitcoin, I think, is not great necessarily at all three of those, but it points to the fact that you could have one and maybe the other would come years later. or maybe in developing markets, you use it as a payment rail. And in developed countries where people are investing in holding it, that could be of a store of value that they're doing it. So it's an interesting, it's pointing the way towards perhaps a fragmentation of the use of currency, and that currencies, even the US dollar, could eventually have evolutions into the way that they're being used, as opposed to the fact that we always think of currency as wrapping up all three of those components. It could be that in the future, and I'll give you an example. When I was working with the World Federation of Exchanges, we had Superstorm Sandy that closed the New York Stock Exchange, devastated downtown New York for about a week or 10 days. And when they wanted to start the market up again, they had a problem because the trading had basically left the New York Stock Exchange. So it wasn't up to the New York Stock Exchange to decide when they were ready to go. They had to check with all of these dark pools and all of these alternative trading systems to find out when they were ready to go, and they had connectivity to their clients. And that's an interesting, I think, comparison to a payment system or a currency, where you could have something that is, for instance, in securities. In theory, it trades on the New York Stock Exchange, but actually the New York Stock Exchange is just setting a price, and the actual transaction money is going through different dark pools or off the exchange. You could have something like that happening in international payments, where you maintain a dollar price across the markets, because I think the dollar is now still the dominant international currency for international payments. But you could have tokens coming up that would allow countries to buy and sell things that are dollar denominated without holding large amounts of dollars. I think that's something that is not, I wouldn't predict it to happen, but it's something that could manifest itself in a number of ways that we can't really judge at the moment.
And well, before wrapping up our discussion, I wanted to finalize by talking a bit about cryptocurrencies in the US. Basically, I wanted to ask you, what's the current status of the crypto industry in the US? Also, well, how do you foresee the future of this industry? And also, well, as most of my listeners know, there was this executive order put out by President Biden in March. So what do you think this order will imply for the crypto industry?
So I should say at the beginning of it that the digital assets work and the CBDC work is very different than crypto work. And I'm not the best person to ask about crypto. I do read the papers though, so and have conversations with people around the executive order and what's happening there. I think it's a very good idea that the government look at this from a holistic point of view, and to try and think of what the strategy is going to be and what the needs are going to be years down the road for the US economy. Also, I think that in Washington, there is a growing understanding that currency and financial is developing into a real area of innovation and growth, and that this is something that can support the values that we associate with the country as being democratic, being innovative, being open. And so it's one of the issues in Washington, which is a very political and divided town at the moment. It's one of the issues that has not yet fallen into a political divide. Everyone is pretty much agreed at the moment that there should be a future, there should be a regulated future for cryptocurrency, stablecoins, hopefully CBDC, but we'll see about that. At the other point I think that's important is that there's still a number of scams and fraud going on. So customer protection is something that still needs a lot of work here. There's a fairly high percentage of the American population now that has bought cryptocurrency or been involved in something around cryptocurrency, and yet the safeguards around it are still not optimal. And there's a lot of work that could be done to make holding cryptocurrency a lot safer. So I think as we see it going mainstream and more financial institutions, BlackRock, Fidelity, all of these groups, Bank of New York, are developing in cryptocurrency and different fintech related digital currency, I should say, solutions to it. I think we'll see a very regulated future here, and I think that's a good thing in terms of growing the market. But I was just in Europe and talking to people there. I think the attitude here is very much more, and in the spirit of sort of Silicon Valley, very much more open to doing developments, trying things with stablecoins, working in DAOs and DEXs, and just a lot of interesting thinking and development going on there. And if you look at stablecoins today, I think stablecoins are 95%, maybe more, US dollar stablecoins for the most part. There's really no euro stablecoin. There's a few commodities, but it really is kind of a US phenomenon. And I hope that the US sort of embraces it, realizes the problems that we have. So there are a lot of people who lose money or lose keys or have problems like that, which is kind of to be expected in the early stages of new technology, but still that has to be brought under control. But I think that generally speaking, as these companies, as more and more companies are becoming significant players in the financial markets, they're going to make their voices heard in Washington, and that will lead to, even more adoption.
No, I think that regulation is very important in this area. I think that the more regulated this DeFi area is, the safer this whole industry will be for everyone, starting with the customers, because I think that everyone needs protection. And I think it's all about finding a balance, between regulations, also education, because in the same way that before trading in the stock exchange, you need to know how it works. People also need to know what it actually means and implies, to trade cryptos, because it's not a game, it's an investment. So that's why I think that education as well is very important, aside from, of course, regulation.
Mm-hmm. Absolutely. So we'll see going forward, but I think a lot of what happens in Washington is down to lobbying power. Lobbying power of banks is very strong. The cryptocurrency and financial innovation companies are starting to see what they need to do and get a positive story out. And so I think they have a lot of potential to get to the right solutions on this. We're not there yet, but I think we're headed in the right direction.
Yeah, I think it's a fast changing industry, which means that it's fascinating, albeit a bit difficult sometimes to catch up with the latest things that happen in there, but at least, as you said, you seem to be in the right direction, and most countries are. So let's see what happens this coming month. It's been an absolute pleasure, Peter, to be able to speak with you today. I'm sure that all my listeners will learn a lot from listening to you when it comes to CBDCs and in general the CBDC future and present and future in the US and everything that we discussed for this past 35 minutes approx. So thank you very much for accepting my invitation.
Well, thank you so much for inviting me, Oriel. I've appreciated the earlier versions of the podcast and YouTube versions that I've seen. So I wish you a good continuation with that, and be happy to renew the conversation at any time. Thanks again.
Well, fingers crossed, Peter, but I'm trying to post as many episodes as possible and to talk to as many people as possible, experts like yourself from all over the world, because I think it's very important to get the whole picture, like from every possible country. And of course, learning more from you, from the US, is something I think that my listeners will appreciate very much. So, well, thanks again. And to all my listeners, thank you very much for listening to this episode and to the rest of episodes. And please stay tuned for the coming ones. Thank you and see you soon.
Thank you.